So Oregon's approached real estate investments over the last 12 months by really looking at structuring partnerships and long-term tactical and strategic partners rather than just doing single asset allocations or looking for a particular asset class that might be in style or out of style at the time. Came in the luxury of having a very mature portfolio that's been investing for 20 plus years, so I don't have any missing holes in the portfolio or exposures I necessarily need to fill. So with that in mind, it's really looking for something that's going to take through the multiple market cycles and aggregation of portfolio, which is a true wealth creation in the real estate space. Challenges of deploying capital internationally is building the conviction to decide how to do it. Justifying is tough. You need to always have a market premium just for the risk exposure from the currency standpoint. You have political risk. We've got the rule of law, you name it, it seems to happen out there. And then we also, I think, went too opportunistic into mature areas like Japan, Australia, and Western Europe that don't necessarily deliver opportunistic premiums time and time again. So trying to get that right, dial down the risk a little bit, but also understand the what I call the knowledge gap is exceedingly tough. So again, it's coming with the conviction that we're in a recovering market in the U.S. There's lots of opportunities here to sleep at night and pretty much underwrite what your next 2 to 3 year return profiles are. And it's tough to justify that you're going to be able to do the same as a U.S.-based investor overseas. Obviously, your home country bias is always the market you understand. So it's a challenge. You have to take what the market delivers, and I think that's the more important thing to keep in mind. So for us, it isn't dialing down the risk so much as looking at what the market can do, and we were stretching too far. We were searching for yield that didn't exist and liquidity that wasn't going to be there with taking too risky a product. So if I can bring the risk back a little bit, then I say I know I'm going to have multiple exit strategies, I'm making good investments, I understand my cost basis, so now we can start climbing back up the risk spectrum. But again, I always called it that knowledge gap. If I can bridge that knowledge gap by getting entry into a foreign market and international exposure, then we can start slowly climbing up the risk curve and doing it hopefully appropriately. So I'd like to make incremental steps on the portfolio risk spectrum rather than just start off opportunistic and work my way backwards. Oregon is looking for what I would call long-term partners. We don't have a very broad portfolio of a lot of managers. We have a very high conviction-oriented portfolio. So the top 65% of my portfolio is in the top 10, well, 65% of my portfolio is in the top 10 managers. So that tells we have a very high basis in conviction orientation around certain managers, and that's proved us well by luckily picking good managers. And part of it's luck and part of it's being ready for luck and capitalizing on when it happens. But finding those long-term partners that we know we can sleep at night, that they're communicative, open, transparent, have the corporate governance, and when things are going bad, they're treating you like friends and family. When things are going good, they're still treating you like friends and family. And that's critical. It's DNA of the top leadership that makes a team, and that's who we try to deploy capital with time and time again, rather than creating a 150 fund index. I would much rather have high conviction to very, very sharp managers that have the right DNA code.